Welcome to the Times of Industry show. There's lots of subject to cover today, and I think that today's guest, Lynette Zang of ITM Coins, who I have come to know and think is super smart, is the right
Thank you.
to get a perspective from. Well, gold is just shy of the 2016 high of $13.52. Silver was briefly over $18 per ounce. Zinc at 10-year highs. Copper at 3-year highs. Aluminum 2-year highs. Brazil and Russia's stock markets up massive. Even as oil is bearish and inflation is pretty tame, things are really changing right now, Lynette. First of all, Lynette, how are you today?
I'm excellent. It's nice to talk to you, Lior.
I'm happy that you're happy, and the listeners really want to know, why are commodities and precious metals moving right now, in your opinion, so aggressively?
Well, in this very short space of time, I think it has a lot to do with what's happening in North Korea. Yet another missile launch over the weekend. So I think a lot of it has to do with the threat of war, really.
Interesting. And you know, commodities have been going up for a few months now, not precious metals. Is that what is the catalysts that are making these commodities soar higher? I mean, zinc is at a decade high. Zinc goes into coating and you know, mostly industrial uses. Is China and Europe recovering? Especially Europe plays into commodities right now.
You know, I'm not really buying this recovery story. I think that if you talk to the normal person on the street, I don't think they're really buying the recovery story. But that is the story that's being told. And, you know, they're also looking for a pickup in inflation. But so that's what they're getting when you're looking at those kinds of things. But I'm really not buying any of it. I think everything is way too precarious. And I mean, and as far as what's happening in the shorter term in the commodities, of course, the weather with the hurricanes, et cetera, are really driving a lot of things as well. We've got the debt ceiling coming up, which I'm sure they're going to raise it, but that's another event that's looming large to push these. But a global recovery, no, I'm not buying it.
Sure. Now, obviously, the prop up in all this recovery is mostly with governments. Governments have the you know, all this free currency and all this bond selling that they do, and they can obviously prop up all these commodities. It's not something that the average guy would see. I completely agree with you. I want to talk to you about... Oh, I'm sorry.
Can I just add one more thing? And I don't know why it slipped my mind a second ago, because I just did these numbers. And since the first of the year, the global central banks have added almost 2 trillion more new money into the system, just since the first of the year. And that's through August. So yeah, that would also push all of the prices for not just the commodities, but the different stock and bond markets as well. Money printing. I mean, it's a central bank market.
Sure. And I want to talk to you about a potential market crash. Now, right now, there's no euphoria yet. I mean, I've been to the U.S. and Canada for the past 2 months. If you ask the average person, he's pretty scared of stocks. Yet they're at all-time highs.
Mm-hmm.
The question I have for you: should people be buying, selling, or holding their if they own S&P 500 or the Vanguard or all the the large indices, which most people have some sort of exposure to? And in the U.S., there's almost 150 million individual investors. What should people be doing with their stocks now?
Well, you know, I always follow this sage advice, which is you do what the smartest guys in the room on any given topic are doing for themselves. And every week we look at the insiders selling out near a market high. So even though I believe we're in the melt-up phase of this trend, which means I think the markets are most likely to go higher with all this central bank, continued money printing, there are no buyers on the other side of this market. So for me personally, and I'm very, very technical, and I've been in these markets on some level since 1964, I don't own any stock.
Interesting. I want to move on to cryptocurrencies real quick with you. China just banned ICOs, which I think is kind of lazy on their part, since what the world needs is proper regulations and not total abolishment of anything. And anything should be discussed at more length. But I want to get your point on China's shady crypto relationship, because I know that you've spoken with me off the air about your opinion on how China is looking to get in the back door of this cryptocurrency ecosystem, and I want you to elaborate on how do you think China, cryptocurrencies, and maybe breaking the dollar reserve currency status, it all ties together. I've heard you telling me this many times, but I want you to please elaborate for the listeners.
Okay. Well, China is a technocracy, so we know that the government runs everything in China. Even though their government is decentralized, the buck stops up at the top. And they have been tasked by the International Monetary Fund, the IMF, to spearhead the shift away from the US dollar as reserve currency into the SDR, which is the IMF's internal currency, as the world reserve currency. They issued the first SDR denominated bond in August a year ago, and then they were included in the SDR basket of currencies in October, and their job is to create a global market for SDRs. So, and they've been working hard toward that by liberalizing their banking sector and many other things. But they've also seen the advantages of cryptocurrencies, which could probably and possibly give governments and central bankers immediate and direct control. And I know the argument is that it goes outside of the system, but that's not really what I'm reading about and seeing all of the time. So in China, there's this small company, and they've developed a cryptocurrency, the AC chain, and its primary function is to digitize all physical assets. And they started with tea in May and June, and now they're in the process. I don't know how the real estate is doing right now because of the hurricane. They're in Texas, but they're in the process of digitizing real estate and turning it into a spendable token. So they're spearheading that, but all of the AC chain, you can buy it with Ethereum or Bitcoin, and when you do, they marry and they become an SDR coin. And so it may still seem like it's decentralized, but there are just like 5 different global nodes or centers where these coins can go through, and those all funnel through to the international node, which is controlled by the IMF and is the SDR. So China is leading that. They're spearheading it because they have the right kind of government set up, a technocracy. So the banks and everybody else will do what the Chinese government tells them to do. So, but I think that going back to what they did today, which was making the ICOs illegal, they're showing you who's boss. I mean, they're showing you who's boss.
Now, Lynette, to understand this, the SDR, who trades it? Who uses this currency?
Well, the SDR was actually created in '69 to take over as the world reserve currency. And maybe we should back up to make sure that people understand what it means to be the world reserve currency. And simply put, it just means that if you are going outside of your borders to buy anything, you have to do so with that currency. So, for example, if you're in Great Britain and you want to buy some oil, you would have to convert the British pound into US dollars to buy the oil. Well, that is the status that we've enjoyed since 44. And we almost lost it in 71 when we shifted from a gold standard to a debt standard, a dollar debt standard. And now, because the system, which is based upon debt, the debt is so huge that it's not payable, and it is, we can't get the monetary velocity. We can't get spending really going the way that they want to stimulate the economy. And so we need a money standard shift. And the shift that they are, I'm 100% certain of this, the shift that they want is the blockchain technology with a smart contract over it, where the central banks will have immediate control. Because in the current system right now, if they make a policy choice, they don't know whether or not that choice had the impact that they were looking for 18 months. But in a cryptocurrency, well, then if they decide that they want to push interest rates way below zero to get you to spend that money rather than leaving it in the bank, guess what? That's immediate. They push a button, they push interest rates noticeably lower, you see your principal eroding, and you're going to make a choice of either letting it there go to zero or taking it out, buying something with it that will hopefully then maintain your purchasing power, which, by the way, is what hyperinflation does.
Interesting. So, getting back to China here, the new oil futures exchange, which they're already test running, and it's probably going to be live in a matter of days or weeks, will be fully convertible into gold. And many see this as another financial warfare against the US dollar, against the hegemony that it has as the global reserve currency. Because, these countries, the US sanctions like Iran and Russia, they can bypass the US dollar with this new oil futures exchange. What's your take on this? Are we, some of the smartest people in finance and economy, they understand that the dollar is toast, but they also say that there's not really a viable replacement. Is China thinking now that they're ready to finally take the baton over? And if so, let's think of the US dollar real quick. The fact that it has the fact that it has value is connected to the fact that you that there's a fixed demand for it.
Right. Artificial demand, right.
Yeah, there's artificial demand, there's a premium attached to it because everyone must use it. If it's not the world reserve currency anymore, 71% of the world is trading in dollars. That's way too much for a country that has only 5% of the world's population. Will this be a very problematic shift that might end up in either a Cold War or worse when the power just shifts from west to east? It's pretty inevitable at this point.
Well, that's one of the reasons why China and the rest of the world is really supporting the SDR. Because the SDR as a basket of currencies, there were just the US dollar, the euro dollar, the British pound, and then it used to be the French franc and the German mark. And then when the euro was developed, so it went down to those four currencies because it eliminated obviously the two individual currencies for the EU. for the euro dollar rather. And that's the way that basket stayed. But the discussion is to even broaden that basket of currencies more. So I don't really think that the world reserve currency is likely to shift from, say, the U.S. directly to China. I think that that the SDR as a basket of currencies, which they can expand that basket to include any currencies that they want to, which would then, because as soon as you're the world reserve currency in the current system, which is debt-based, you have to constantly run deficits, and so ultimately you end up where we are right now. But in the new system, the SDR is not created from debt. And as a basket of currencies, China would influence that basket more and more and more, as would Russia, as would a lot of the emerging markets. But whoever holds the gold, which is real money that holds value, is going to be what has most of the power inside of the SDR. And since you brought up the artificial demand for the dollar as the world reserve currency, well, the IMF took care of that. It's called the SDR substitution fund. So if you are holding any kind of dollars or dollar denominated instrument like bonds or something like that, you simply deposit them into the substitution fund, and then the IMF converts those dollars and those dollar-denominated instruments into SDRs and SDR-denominated instruments, which means that then there's going to be an awful lot of dollars flooding that are no longer needed, flooding back to our shore, and that is also an instrument to generate the hyperinflation. But what that also means to us is that where we have been the only country in the world, now look, this has actually been changing since 2005, so I'm just staying general in here, but we're basically the only country in the world that gets to create from debt the money that we need to pay our global bills. So once this shift occurs, well, we're going to have to convert our dollars into SDRs. The dollar will just be regional. I mean, I'm reasonably certain. In fact, I would say that I'm 97.5% certain that whatever new money comes in here will still be called the dollar, because then people won't psychologically realize that anything has changed, when in reality everything has changed, and that's the way that they've always done it. But we're going to be like everybody else, where we're going to have to go buy SDRs if we want to buy anything outside of our borders, and the dollar will just be regional. And I think so will the Chinese yuan. That'll be regional, but they'll have a lot more influence at the IMF than we do. And in fact, Christine Lagarde even said that she could envision them moving the IMF offices to China, because they are required by their statutes to be housed in the largest global economy, or the largest economy in the globe, rather, and that would be China's been working on that very hard, so they anticipate that to be and expect it to be China.
Interesting, very interesting. I want to ask you about negative interest rates on government bonds. They're storming back, almost surpassing previous high of about $8 trillion. Why, Lynette? Why give money to a government when you can get a guaranteed loss by doing this?
Well, first of all, negative rates take your principal away, and they've already, I mean, officially there's only 4 cents left out of the purchasing power of the dollar. Why would you do it? You wouldn't do it. It's not logical to do it. Historically, it's never been done. Why would you pay somebody to loan them money? Unless, of course, they're your children. That's all. That's the only people that you would ever pay for that. But governments have a captive audience, don't they? And so with all of the quantitative easing, the global central banks are buying the debt from the global governments. So the global governments create that debt. So it's really the taxpayer that's forced to eat it, or pension plans, like in Greece, for example. And we know that they got into a lot of trouble with government debt, but they were legally obligated in the government pensions that 77% of the money in those pensions went to government bonds. Well, guess what? If those government bonds are at a negative rate, you're still buying them. So that's really, it's insanity. It's insanity. Why would you do it? You wouldn't do it unless you were forced to do it. That's the whole point of taking us cashless. Cash is debt that does not pay interest and does not charge you interest, at least not yet. That's the next step in the evolution.
Interesting. Lynette, lastly, I want to talk to you about the Fed. And do you think, I've done so much research on this. It seems like every tightening period that the Fed has had since we went on the dollar standard, the fourth rate hike, which coincides usually with about 2 years in the making since the first one, since the start of the tightening cycle, that's usually when the market peaks, when the stock market peaks, when people decide, hey, I can get enough interest, by doing other things, by going into bonds, etc. The stock market looks expensive and we see a top. Will the Fed signal the top for the market again with a fourth rate hike whenever that comes, September, November, December, or next year, whatever they decide to do it?
That may do it, or because they seem, hell-bent on raising interest rates, even though it doesn't make sense, because interest rates are a tool to stimulate or to control the economy. And so raising interest rates would, into this current environment, really, is the global economy robust? That would be a no. So they're trying to cool inflation by raising interest rates. So yes, I think that raising the rates could certainly tip the markets. But the problem is, the real problem is that they can't afford the markets to drop very much because of all of the derivative contracts. The same thing with the bonds. They can't afford the principal on the bonds to decline very much, or real estate to decline. They can't afford it because there are too many banks that are insolvent with even a 4% move in their asset base because of the leverage. And we don't even really know. We know the reported leverage, but we really don't know the level of leverage in all the derivatives. So they very well could force that with an interest rate increase, but there are also many other things that could force it. I think they need to keep them elevated here. I don't think they're ready for the markets to drop yet. So they could do it artificially. That's not a big deal for them. They just use derivatives to push it up. And that's cheap.
I would ask you what you're bullish on, but I think I know the answer to that. So can you please describe to people, I know the website is itmcoins.com. Could you please share with listeners what you do over there and how they can get in touch?
Yes, and it's actually itmtrading.com. I think that we have coins on these different technological things, which you're probably more comfortable with, Lior, than I am. But what we do, we have our YouTube page as well. So we're super keen on education, and we really believe in educated choices. And all of us here are on a mission to educate people and to help them to look a little bit below the skin of the markets so that the portfolio of physicals, of tangibles that you actually hold in your possession. Because you really need to be clear that 100% of the time historically, you could always convert gold and silver into any currency, good, or service. You cannot always convert currencies into into gold or goods or services. They lose value, right? And they're not accepted anymore. But that's not true with gold and silver. So yes, I am extremely bullish on physical assets in your possession: food, water, energy security, barterability, wealth preservation, community. And that barterability and wealth preservation is what you're going to do with physical gold and silver. And we help people develop the portfolios that support their individual goals.
Perfect. Thank you very much, Lynette. Thank you. Great interview, and I really hope to have you back in the near future.
Absolutely, Lior. It's a pleasure. You take care. Be safe out there.
Thank you, Lynette. Thank you for taking the time to join us today. Lynette Zang is a very educated guest and has over 35 years of trading, investing, and bullion dealership experience. In today's interview, she stressed the importance of owning real money, precious metals. And it's important to understand how much, when are the best times to accumulate, and how to store them correctly and properly. Go to wealthresearchgroup.com/safe havens and wealthresearchgroup.com/2017 to get access to the top 5 safe haven assets and into the behind the scenes of my personal portfolio for 2017 and how I allocate capital. With regards to commodities, Lynette and I both have seen copper, zinc, and aluminum soar in price, and lately gold and silver as well. Wealth Research Group is staying on top of this in a big way. Go to wealthresearchgroup.com and click on special reports on our top menu for a wide array of PDF downloads to become prepared for a crash with general equities and a run-up with commodities that we're going to experience in the coming years. Lastly, with regards to cryptocurrencies, we've seen our suggestions rise dramatically, but Wealth Research Group is ready for the next stage, a one-click option for owning a secret crypto ETF without ever having to store coins with any exchange or wallet. Make sure you're subscribed to the free Global Wealth newsletter, as we're going to publish the #1 way to get leverage and safety with cryptos very soon. Thank you for joining us today.